the power sector as a whole is underrated for it. Of course, it is the major focus, and standalone, if you just look, at an isolated effect, you're actually not fixing a very big part of the problem. But the world is built on energy, right? And, if you can manage to, create abundant amount of energy efficiently in the electricity sector, then I'm sure that subsequent effects it will have on other sectors will be mind-blowing. And also, if you see what hydrogen really manages to do, is that it manages to merge the gas market with the power market. And if you do that, I can't remember the exact fold, but then the power market probably just grew with, 8 times or something like that.
Hello and welcome to Energy Unplugged by Aurora. This podcast features various experts from Aurora having in-depth conversations with key industry leaders, policymakers and academics from all over the world. It explores the hottest topics across the energy market and gives a unique perspective on major energy issues.
Welcome to Energy Unplugged. I'm John Feddersen, co-founder and chief executive of Aurora, and my guest on the show today is a partner at one of the leading clean energy investors globally, having recently raised an enormous €7 billion fund for clean energy investment. He's a veteran of Europe's offshore wind boom of the past decade, and he's a deep expert on the emerging energy transition in the US, currently New York City based and developing projects across many of North America's energy markets. My guest on the show today is Henrik Tordrup, partner at Copenhagen Infrastructure Partners. Welcome, Henrik.
Thanks, John.
Thanks for joining me. And just out of interest, and I'm not planning on doing this anytime soon, but how hard is it to raise a €7 billion fund in clean energy at the moment? Where are the challenges?
No, I think it's not to neglect, the efforts, right? And I think our team has worked really, really hard in achieving it. But I think, we had a lot of tailwind behind us when doing this. And then, of course, it's significantly easier to raise a €7 billion fund when you have successfully started with a €1 billion, moving to €2 billion, moving to $3.5 billion. So I think, on a standalone, it's, of course, a massive achievement. But of course, with the journey we've been on and the track record we have delivered, I think for my relative scale, it was we had a lot of things going with us, also with COVID and everything, and the increased focus on ESG and our position in the market. That I think that the team can be very proud of what they managed to achieve in a relatively short time period. Yeah,
interesting. Now you just need to deploy it, I suppose. So
exactly. I think that will be more difficult, but let's see.
So can I start with your journey, Henrik? And I find it interesting. You cut your teeth in Europe, in Denmark, in the British markets, those types of things, and you've moved to the US. Why did you decide to do that?
No, so I think we were, in the mid part of the last decade, we were, Europe returns were really coming down. Our funds at the return requirement, we had struggled finding investment opportunities in Europe. And then I think, this was around, the yield curve crash in the US, where we started, to get a lot of inbounds from there. And we had, touched here and there the US market. And then with that, I signed up to say, I can put my focus on trying to, start from a clean slate in the US and see what we're able to find. And then from there, we got going by buying the first couple of, really development, assets. We got involved in a couple of projects that actually never happened, but that was where we learned a lot about the markets. It's often the difficult, complicated ones where you build up the learnings, right? And they never happened, but we never really put any money into them. But so they were a good learning ground for getting us going. And then it just took off, right? I think, at least at that point in time, a lot of people talked about, renewables doesn't really happen in the US, but when you really got in to see it, on a quantitative scale, it was a much bigger market for us with how our funds are designed and how big they have become, where we have to do big projects for it to really fit our envelope. The US is a very well-sized market for what we're doing, and that I think that's also why we've been very successful taking some of the experience from Europe, bringing it over here, and then manage to have the flexible capital and the experience to get a lot of stuff done in a relatively short amount of time.
Yeah, and it is interesting. I think, and we may get to this as sort of, the Biden administration, change of president seems to have given the renewable industry a lot of impetus. But there were a few people who, to go in partway through the Trump presidency when, the pitch was we're going to return to coal miners' jobs are going to boom again. I think took a little bit of foresight by the people who entered at that particular time. What is it? I mean, do you see yourself, keeping yourself busy in the US over the medium term, and what is it that excites you most about the US energy markets at the moment?
No, I for sure think I will stay quite busy on the US. I think it is our biggest market already, and I think it will continue to be so for the short to medium future. And then we have to see how the world develops in more developing markets, if that will take over the US. But I think the US and Europe, it's I think you've seen it many times through history, right? That Europe gets going quicker in a more steady slope, where the US they lag behind, and then they just go exponentially, and then they get going, and then they maybe overbuild a little bit from time to time, and then it crashes, and then they get going again, right? And I think that's what you'll see here too. So I think a lot of innovation in certain parts of the energy transition will happen in the US, and the momentum behind it over here, I think it's really, really strong.
Yeah, it is. It's kind of, Biden was elected on a zero carbon power sector by 2035, and some of the ambition, you just kind of think, wow, but maybe they'll do it. So we will see certainly signs of intent early on. The other part of your journey I wanted to ask about, you were at Dong before it was Ørsted, and I think a theme that's come up on this podcast in the past is, the in a sense, the magic of turning from a hydrocarbon focused company into one that is, entirely renewables. I haven't seen too many places it's been replicated. People have talked about the benefits of state ownership and the cocoon that provides, or the scale, and the fact that you're not on the scale of a Shell or a BP in doing it. Did you feel, now you were at Dong before it was Ørsted, did you feel this change coming culturally within the organization? Is the fact that it happened as much of a surprise to you as someone on the inside as it would be to someone on the outside, do you think?
No, I mean, from the inside, it wasn't a surprise. It probably happened, to be honest, a little bit quicker than I had anticipated, but I think that's also a lot that the cost trajectory, in particular for offshore, just went faster than I had also expected when I was sitting there, right? So I think, it was, from when I started back in the day as a junior there, renewables was a niche business, right? And, but was something that was, for sure being taken serious, but was still a niche business. And, I remember when I started, we were looking at building a new coal-fired power plant in northern Germany, which obviously ended up getting scrapped, and how the momentum changed so quickly there. Then it quickly became that it was oil and gas and renewables, but you could feel that, oil and gas didn't really get allocated new capital, and then, things runs its own cost when all the new capital goes to a certain place, and then the business started growing from there. So while I was there, I think, the renewables business went from being an ancillary business of the power business to be its own business unit, and ultimately be, more than 1,000 people when me and a lot of my colleagues left to start up CIP.
Yeah, and would you give? Do you give? I mean, a big part of that transition was offshore wind. Do you give the British government, and maybe I'm trying to channel credit to the British government where it's not due, but do you give the British government and its philosophy around offshore wind and support credit for enabling that transition, or do you think it would have happened irrespective?
No, I think they for sure have some credit for it, right? I think I'll also give a lot of compliments to the CEO at that point in time of Ørsted, and also the Danish government, saying that Denmark had to be a key player, and this also driven by all of the export that Denmark has benefited from and was well positioned to benefit from at that point in time. But of course, I think the UK had been a bumpy road from a political perspective when it comes to offshore wind. I think, similar to, I guess, the onshore story of America, right? With stop, go, and also resulted in, ultimately the UK not getting enough, local businesses out of their venture into offshore because it was too much stop go. But nonetheless, I mean, they for sure, got it going. They achieved the scale that was needed to do an industrialized approach to offshore wind that really brought down the cost, and also the capital inflow at a speed that enabled where we are today. I think they do for sure deserve some credit for that.
Yeah, that story of British companies is a really interesting one. I was having a conversation recently. Centrica had the lease on vast swathes of the Irish Sea, the ones that BP just paid a lot of money for in terms of leasing, gave them up. SSE obviously retreated to Dogger Bank in the UK, which is potentially enormous potential. But it's a good point. We talk about the British policy success, but certainly some missed tricks along the way as well. It seems. But yes, stop start is better than stop, which is what you would say for potentially CCS and some of the other technologies as well. One other question on this: do you have confidence that the super majors in oil and gas can follow the Dong approach and make the pivot that's at least the Shells and the BPs, if not the Exxons of this world, seem to be attempting at the moment?
I think they have certain benefits and certain disadvantages, right? I think in a world that is turning into, which I would say is not really the case for offshore yet, but is turning into be a more merchant world. I think there's massive benefits of being a well-diversified companies within all sorts of commodities and also on a global scale, where I think they have unique benefits over somebody like Ørsted. But I do think that they will struggle with the same level of innovation, agility, and speed that a company that is so focused as Ørsted can do, right? Because I'll give of course I'm biased, but I'll give them a lot of credit that they're for sure good at what they do.
Yeah, interesting. And the vertical, the sort of fuel part of it seems relevant as well. We'll talk about Texas later on, hopefully, and the implications coming out of that. But certainly, a lot of the fossil fuel companies and suppliers seem to have been the ones that did the best out of that particular incident when there was a deep freeze in Texas in February. So if I could move the CIP story and away from your story, so CIP, to me at least, it's in that space of big renewables fund managers like BlackRock and others like that, but it, at least from the outside, feels like it has a sort of Danish culture to it, or a European culture to it. What is it about CIP that's enabled it to succeed? Was it all timing? Was it a particular set of skills coming together? Was it the culture, or the even the location as a big organization in a relatively small country?
I guess it's never a single thing. It's a combination of many things, playing together at the right point in time with the right skills. But I think what we've been really, really good at, and what we've been trusted to do by our investors, is that we came from the industry ourselves, right? We came with a deep understanding of development, of how it is to construct a plant, operate a plant, and so forth. And by doing that, I think we've been very successful at all the time, moving in the value chain to places where less people were focusing. And then by, how the world have developed, where, these assets in particular, when they're up and running, are becoming, more and more attractive for people to own. And, the influx of that money has just enabled us to have great success, because we've all the time, when we took construction risk when no other financial investors could take construction risk, and then when they were allowed to do that, then we started taking some development risk, and then we took a little bit earlier development risk, and I think that's what we've been good at, having the foresight and a bit of luck, I guess, along the way, and in all the time, focusing on where there were less competition for capital. So that's also why, we are super focused. I think it goes, many of the other fund managers you talk about, right? They are more conglomerates within the fund management business, right? Where we are probably one of the most, narrow focused investment companies in the world, right? We only do energy, and, we can do non-renewables, but we to date have only done renewables, right? So, and we're in the greenfield project market. So,
yeah, interesting. So power sector experts, clearly not a specialization on a particular geography. Does that mean, as you think about your strategy going forward, you think a reasonable place to chase yield would be, frontier markets and new geographies, or will you be focusing more on the sorts of things you've done in the past, which is new types of development, new types of construction risk, ones that the market isn't yet ready to take on?
I think it will be a combination of it, and it depends a little bit on what technology we're looking at, right? Besides the US, I spend a lot of my time, on a global scale to fund our, what you would call grid parity efforts. So, everything that is unsubsidized. And in that category, I think that is by nature the more established markets where you're figuring out, is that a private transmission or some sort of a storage solution, whatever it is, or a combination of many things that is the right product for the market. And then I think, some of my colleagues that are more focused globally on offshore wind, that I think they're very frontier market focused, right? Which is also proven by the amount of offshore pipeline we've been managed to build, where I do think we have the largest, offshore wind pipeline outside of Europe by anybody, right? Where we've been very successful in our approach to set it up and, get people to move out and, hire local talent and so forth to get established in some of the markets that I think often can be more challenging to do if you are in the belly of a big corporate.
And how do you think about, just a deep dive on that, how do you think about policy risk? I mean, when you talk about offshore wind frontier markets, and we're not talking about, sub-Saharan Africa, we're talking about Japan, Taiwan, the state of Victoria in Australia, which is one of my favorite offshore markets, not least because that's where I'm from, but I think they have huge potential. How do you think, Victoria, Australia, it may never happen. You might be in a world in which, there's sufficient space, onshore wind is enough, and it's slow to move. The same with Japan. It's sort of the market's been liberalizing for the last 20 years, but we're still going there. How do you think about managing that sort of policy risk when you're taking out leases and it may just never turn up, unlike in European markets?
No, but I think, with that, as with everything else, there's a lot about having scale and diversification, right? If you put all your money in a single project, of course, everything will not work out. So you need to place your bets, and you need to have a portfolio. And then I think it's a matter of seeing, what is rationally the right thing to do. And then, as it is in politics, things can go up and down, and the rational doesn't always happen short term, but long term, at least in most parts of the world, the rational argument tends to win, right? And I think that's where we're well positioned with the structure of our funds. And I think that's something we've been really, really good at, is to set up fund structures that can enable us to play in this industry, which historically has been difficult for like short-term focused funds and so forth, because sometimes you need to be able to go in and simply be patient, right? And that's easier if you have a bigger portfolio, because then you will have something that runs through according to the fund time cycles, right? And sometimes you have to roll it on to a new fund or do it late in the fund cycle.
Mm-hmm, mm-hmm. And how are you thinking about hydrogen? So one more question on CIP strategy. You're focusing, as I understand, heavily on hydrogen. You're raising capital around deployment into hydrogen. One of the things I hear a lot of, that Aurora has a sort of European hydrogen product. It's been hugely successful, lots of subscribers. Whenever we hold a WebEx, hundreds of people turn up and jump on it. And yet the number of, but the question I get most is, where are the executable opportunities in hydrogen in Europe? So huge excitement, but from what I can see, relatively little action, particularly if you're not sort of already an industrial player in Germany or whatever it is. How are you thinking about taking opportunities in the hydrogen space at the moment?
No, but I think it's important to, I think, if you're driven by, I need to have something in the ground next year, it's a difficult market to operate in, right? So I think it's a matter of, finding the right way to plant the right diversified pocket of seeds around in those right markets, where there is also, there's a lot of things that has to be worked out before these things really get off the ground. But where are, the right fundamentals to do it, and where is the political support to get it going, right? And then, when the first have got going, then the next will be easier, and the ones after that will be very, very easy, right? That's how these markets take off. But I think I think it's been seen, throughout the last 20, 30 years, in other parts of asset classes in this whole sector we're in, right? And I think there are certainly many things that are very, very different here. Logistics are different. The off-take market is completely different, and it's not a non-recourse world to the same extent as power is. But I think there are still many, of industry dynamics that are similar, from where you can draw many learnings and from there try to build successful projects. So, but I think it's a matter of having access to a big enough portfolio that is also geographically diversified a little bit, depending on what is the political move in different parts of the world, right?
Okay, interesting. So I would, on that sort of last point, it would be reasonable to infer that at least this first wave, as it has been for a whole bunch of other technologies, government will have a big role to play, you think, and so you need to understand the economics, but you also need to understand the political winds, which way they're blowing.
Exactly, and I think sometimes it's not like the government needs to write a big check necessarily, right? But maybe they need to amend the regulation so it's actually feasible to get a project done, right? And I think it's stuff like that. And I just out of experience, some jurisdictions that are where it's a higher thing on the agenda to get this to do, they will do those things that cost them nothing but requires work, where in other places, even though it costs them nothing, there's just different interest. You can't get them to do it in a short order, right? I think it's some of those things. It's not necessarily that it needs massive economic support. I don't necessarily think that's the case. And I think it will be a different dynamic than the renewable power business was built out. But there's still, there's a need for clarification of many things along the way.
Mm-hmm. Very interesting. Do you ever? I sometimes have this concern. I've been talking to a number of utilities leaders in Europe about this concept of a just transition, right? And it's a slightly vague concept. Politicians like the idea of a just transition because it speaks to jobs and it speaks to kind of regional development and it tells coal communities not to get too worried about jobs being displaced. And the sort of the from the utilities, the narrative is something like this. Okay, historically we were burning coal and gas. We're moving into renewables. We're predominantly in renewable. You could say the same for Iberdrola or RWE or SSE or NL or any of these big utilities. And sort of historically we're in there. Now there's a bunch of legacy assets that are running. And it's not as simple as just turning our back on fossil fuels and doing renewables. We need to run these things for another 5 or 10 years, not least of all because we need to keep the lights on, but also because, we need to transition these regions that depend on these jobs to the new energy world, the net zero world that we've committed to. And I wonder, is there this tension that there are huge buckets of capital, and I think you said before, CIP doesn't necessarily fall into this camp, but which are purely focused on renewables. And I just wonder, do you see a risk that, as these buckets of capital expand, these legacy industries that are important for, social reasons end up, no one wanting them. Possibly there's a sort of buyer of last resort. It's a bit like the tobacco industry in a sense. And that hampers the just transition in a sense. And I say it from the perspective of someone who, I don't know, probably 9 out of 10 investment funds I talk to say, we won't touch investments in any fossil fuels. Do you see a risk there?
Yeah, I think there is a fair risk, right? I think, as I mentioned, we can do non-renewables in principle, but we haven't done it, and I don't think there's a strong desire from our LPs to do it, right? And I think there's a massive push from the investor community for renewables and ESG over everything, right? So I think there's for sure a capital flight from that. So I understand where you're coming from with the concern. I haven't spent too much brain capacity on trying to figure out how the whole thing will actually play out, but I think you see it, and you also see it. I mean, you also see it on the employment market. People coming to places like us because they are in these funds, and it's people struggle finding new capital and so forth. So I think a lot of it, there's always going to be buyers, and it's probably just going to be different types of capital than big institutionals. There's probably smaller setups that are more controlled by single individuals and so forth.
Yeah, and possibly in that case, there's a bigger role for government to ensure that we're not just optimizing narrowly for the lifetime of the plant or the profitability, for broader.
But then I think there's a lot about energy transition to think through with some of this old infrastructure. How can it be used in an intelligent and smart way in the new system, right? Where I think America is doing much better than Europe, in my personal opinion, right? Where with the raw market power of, all this stuff exists, there's a lot of money in it and it's very expensive to take down. How do you find the right way to use it in the new world? And I think if you have a system where, transmission cables are, pulled out and, there are existing stations around, even though they're poorly located, it has the rationality against it if it's not used, right? Because, transmission, also if you, do a total cost is a massive cost to the system, right? And not using transmission that's already built does not seem right. So I think, with the right innovation and focus on some of these topics, I think, there's probably a good argument for why you should be open to invest in some of these things. And then maybe the short-term business is not so ESG, but the long-term business actually is, because it's how you repurpose and move these types of facilities into the new world.
Yeah, that's a really good point. And the precision and the data with which we talk about ESG, I think I agree with you, is an enabler of some more nuanced investment decisions that are probably good for society. Do you, just one final question on CIP? What you see a lot of markets, you're more active probably than almost anyone around the world. As a renewables investor, is there one risk that more than anything keeps you up at night, that you worry about?
It's I don't know if it's like one risk, but of course things are moving so fast here, and what really happens in some of these and we spoke about it before, John, right? What happens in some of these markets when the general supply and demand balances goes out of check, and how does that play out, right? Because there's no doubt about it that from a societal value point of view, there is a risk of a de-link between what do you achieve and what is the value of what you deliver, and is there a need for in different markets, boom and bust cycles, in order to justify that you actually get paid for what you deliver to society, and I think you don't want to get caught on the wrong side of one of those cycles. So I think that's probably what keeps me up at night. I don't know if that answers the question.
Yeah, I think so. And I do think like the US is probably a bit more prone to that, just because, it's that classic European argument. You've got 30 odd countries all setting policies at different paces, and it tends to self-regulate a bit. Whereas, the great Australian example was wind in South Australia, where, federal scheme basically just dumped, 100% renewables capacity on a 3.5 gigawatt market. And it caused substantial problems. And you look at the interconnection queue in certain US markets. That would probably be my big one in the US, is just, is there more stuff than whether it's solar, whether it's batteries, than the market can bear here, and how are people thinking about it?
And then, I'm also, another thing is, sometimes I think when you talk about that, I'm also a little bit worried about it goes in the same bucket, but poorly designed regulation that have, very obscure, short-term consequences for actually, a slowdown of the transition long-term. I think there's a little bit of a risk of that, with politicians being too much of in a rush. And so I think you see that from time to time all over the world, but at different magnitudes.
Interesting. And are you talking about a public acceptance type risk there? That
No, I'm more about like the incentives given out because some politician wants to have a rapid impact, right? And then you do some things that seems right, but long term it over incentivizes or gives the wrong incentives, and then it destroys markets that were actually decently functioning. So and that's very difficult to model and forecast upfront how those things play out.
Yeah, indeed. It's a topic for another time, but one thing that raises up my agenda at the moment in Europe is the network, and you probably, being in the US, obviously it's hard to build network, but with nodal pricing you get pretty good signals. In Europe, we haven't had very strong signals. I think some Aurora work recently suggested the fundamental price difference between North and Southern Germany is maybe 10 euros. And it's sort of a disconnect between financial markets and the socialization and some costs, and the reality, at least to me, is rising up my risk, my kind of risk level in Europe as I think about how we price the network in general.
Yeah.
It's not a bad segue, that point about incentives from government, to talk a little bit about our industry. And a first question for me is, and I would normally leave this question for the end, but we may want to go deeper on it, is, do you think the role of markets in driving decarbonisation is overrated or underrated?
You mean markets, or you mean power markets in particular?
Power markets, sorry. Yeah.
Markets.
I suppose power markets and carbon markets would be the two that I'd be thinking about there.
No, I think if you take power market first, I probably think the power sector as a whole is underrated for it. So I think of course it is the major focus, and standalone, if you just look at an isolated effect, you're actually not fixing a very big part of the problem. But the world is built on energy, right? And if you can manage to create abundant amount of energy efficiently in the electricity sector, then I'm sure that the subsequent effects it will have on other sectors will be mind blowing. And also if you see with hydrogen, I think what hydrogen really manages to do is that it manages to merge the gas market with the power market. And if you do that, I can't remember the exact fold, but then the power market probably just grew with 8 times or something like that, right? And I think therefore the power market is underrated in my personal opinion. And I think on carbon, I think carbon is also it's probably also the importance of it is underrated, but probably less for incentivizing the power market build out. But I think it's more for the consequences in society through proper carbon pricing into everything from industrial products to in consumer products that I think can move immense behavior, and also immense flexibility. I think that's more philosophical, but personally I do think with a proper introduction of carbon pricing, I think you can see change behavior that can enable a very different load patterns that can enable much more renewables. If you then at the same time had a proper priced electricity system where people, it's more fixed price, less variable price, and then you can actually get the load to be a little bit more flexible towards the supply.
Yeah, and we might be going through a bit of an experiment like that in Europe at the moment, where we're seeing €60, £60 carbon prices per ton, historical highs. I'm not sure yet if the market is fully taking a view on that as the long run outcome. There's certainly a lot of short term uncertainty, but you imagine if that sticks around for a few years, we'll start to see what credible long term pricing does to people's behaviors, people's long term investments. I think it will start to get normalized. Do you think Europe will? So you've got experience in nodal markets now, quite a lot. Do you think Europe will go down some sort of nodal route? Do you think we need, policymakers at some point will decide we need more locational price signals in Europe than there currently are?
I have to admit also, I haven't focused on Europe to the same extent for that long. So it's not something I've given, an immense amount of thought. I would say there's for sure pros and cons about both, right? And I sometimes I am probably also a little bit of the belief that if you really want to get, this transition fueled the fastest, then maybe less subsidies, but more that, that governments, are better positioned to take some of these risks by the pure, diversification and insurance benefit of being in the whole market compared to, single people being in single assets. So I'm sure people will play with the idea. I'm not sure it will gain traction because I think the Europe is more, socializing by nature, right? And I think there's also, you talked earlier about, adjust transition, right? I think it's also more, you can argue that it's less just if you do it nodal, because then it depends a lot, where do you live, close to different things and so forth, right? So I don't see Europe going all the way, but maybe, what will probably happen is that both markets will move a little bit closer to each other, I imagine.
Yeah. It's interesting how that theme of, and it came up when I was talking to Greg Jackson, the CEO of Octopus Group, recently for the podcast. There's the sort of, okay, markets hard to argue with on theoretical grounds, and in general, if they're functioning well and they're credible, that's a great basis for future investment. But there's also just this sense of, we're trying to do an energy transition at a certain speed, and do we trust markets to deliver it at the speed that citizens and voters want, and with the sorts of just outcomes that we want? And I'm not sure there's a huge amount of faith that markets are great for dictating the right pace and dictating the right social outcomes from this. And there's this tension that I see in this debate on a regular basis, which is around.
It is. I mean, What we're trying to do here is to take an industry that would probably normally take 100 years to get where it's going, and do it all in 40, right? I mean, that's reality, and then therefore, I think certain things you probably just have to do slightly different in that case.
Yeah, and I think my sense is the number of people who would say markets are the answer once we reach the steady state would be very high, but the number that say markets are the answer over the next decade, I think, is substantially lower for that reason. Could I talk about US federal policy now? So we talked a bit about Biden's policy. Obviously, the Green New Deal advocated by AOC in the US has reasonably big audience. That's sort of the Bernie Sanders sort of side of the Democratic Party as well in their views. What do you think the impact? Where do you see as the big impact of the recent federal election for the decarbonisation agenda? Have things changed a lot?
I think it's difficult to point exactly to concrete policy that makes a massive difference, right? I also think if you look at the old administration, I don't think actually it had. I don't think it had. I mean, we got a little bit blocked in some of our permitting stuff, but otherwise, I don't think it had a massive negative impact on the build out. I think the build out was actually quite grand during that era. Also, I think it's more the change of sentiment. Overall, this is something that's going to happen, and it's sound business for it to happen. And then when that momentum starts to build up, it's like a catalyst for further development and innovation. So I think it's more it's actually more the soft support of it than it's the tangible policy. But then of course, I think there are some important things coming on the way that will prove very important in stimulating a more rapid build out and more rapid transition that otherwise would be the case, a little bit going back to what we just discussed a couple of minutes ago, right?
Yeah, interesting. And I suppose, would you agree there's we'll know a lot more a year from now, as legislative processes, it's a little bit too early?
I think we'll know a lot. It's a little bit too early, right? And I think a lot of the stuff that comes out, there's many stuff going around with different types of, tax credits reform and so forth, right? And I think if you see some of the things that probably needs to get that's more important to get a big push, it's probably more important that, storage and transmission and so forth gets a push than onshore wind and solar that are already quite cost competitive. And then, focus on getting power markets to work a little bit more efficiently, how it interplays with regulation. I think if you can get some of those things fixed and fuel up and fuel out the reliability of the system, which needs reform in many different aspects. If you can get that going, I think the US is on a course to a very, very rapid transition, and also I think they will overtake personally Europe very, very quickly if they manage to do it correctly.
Yeah, interesting. And for listeners that don't know the US market particularly well, the sort of politically feasible driver of low carbon investment has been tax credits historically. Now, Joe Biden's signature decarbonisation policy at the moment is a clean electricity standard, which is a little bit like a carbon price, but it doesn't raise revenue directly for government. That's one that it seems could form a step change, and at least from an economic perspective would be a more efficient approach. But so far, we've seen extensions of tax credits for batteries, in the offing, offshore wind, these types of things. So it has been at least a consistent policy so far with the past. Do you know why? So I asked this question to anyone who knows about US power markets. I still don't know the answer, but do you know why these sort of vertically integrated monopolies are still so popular in the US? Since the big ones being in the southeast and the northwest. Why do these market structures persist? What is desirable from a voter perspective in the US about them?
I think fundamentally it's very desirable for the people who own these regulated integrated utilities, and I think they managed to hold on to it for a long time, right, and have not been forced to deregulate. I think fundamentally that's what it's about, right?
Yeah.
The political system is just different over here than what we're used to in Europe.
And the regulated returns are, frankly, pretty insane in the US.
They are insane. They're insane.
We're talking sort of high single-digit percentage, rate-based funded cost of capital on very low-risk assets. In Europe, we're talking 3-4% for these similar assets. It's
fully agree. I personally doubt it will continue to be sustainable, but let's see how it plays out. It's sometimes it takes a long time to change things. Sometimes.
Yeah, I mean, so I don't know. And one example, and maybe this is a good segue to the Texas storms, but it's sort of, there's all sorts of things you could do to address, the lights going out in Texas when the temperatures drop, at a sort of 1 in 20 year freeze event. One of the ones that got the most traction was Warren Buffett coming in and saying, I'll spend 8 or 9 billion on a bunch of CCGT plants, for a rate base, substantial single digit rate base return, and that's the one getting the traction. So I suppose my initial thinking was these things will go away, but it seems to be one of the front runners, and then someone else has popped up to offer the same sort of deal. So it's liked for whatever reason. Anyway.
Yeah, I cannot fully get it either. It's interesting in a country that is so much more, I think Europe is also capitalistic in the end, right? But it's really a true believer of hardcore capitalism. That whole part of society is run significantly more socialistic than it is in Europe, which is very interesting.
It's so I found it so surprising entering the US of those regulated return businesses.
It's comparison with Premier League football versus sports in America, right? It's a little bit the same. It's interesting. It's the two industries that are run like a socialism, right? It's interesting.
Interesting. Do you, just on that Texas big freeze, Storm Uri, massive deal, humongous, 5 days with the lights out. Are there any lessons there coming out of that for policymakers, for renewables investors?
I think for policymakers, there must be a lot of lessons, right? I think, the cost to society of such an event is abundant, right? And I think, on people on the other side, right? I think it's clear that if you were a winner or loser was probably primarily driven by pure luck, right? I think was your node frozen over or not, right? I mean, it was in the end it was probably pure luck or unluck, depending on what side of the equation you were on. But I think for me, the big learning is also that it probably has been overcomplicated. Through the financial structures invented and the financial products to try to de-risk some of this, because nobody wanted to write more straightforward contracts, have overcomplicated it. And then you've tried to patchwork the systems. And then you end up in these, 1 out of 100, or maybe even 1 out of 1,000, type events that has massive consequences that are, that it's, if you're forced to look at it, you'll say, yeah, but the probability of it happening is so low. But it's just, it's just a system with too many intermediates that has created a level of complexity that, feels unintended consequences which doesn't really make an awful lot of sense. And I think it's something you have to be wary of as an investor. Yeah. But I actually, somehow it was good that it happened now rather than happening 10 years ago. So, there's a little bit of a reset and of how these things are set up going forward.
Yeah, interesting. Good. So a couple of questions on renewable, on our industry as far as it relates to kind of deployment of renewables. So one question I have here is, you talked about CIP's focus on development risk and expertise there. Just a couple of things have popped up in the offshore wind space. I think, last year we had Ørsted on wake losses. Recently we've had, cable, billions of dollars worth of cables. I mean, are we still working out what it costs to build and operate an offshore wind farm, do you think? Or do you think we've got a pretty good sense of that now? It's a reasonably new technology. Where do you think we are in terms of the maturity and knowledge of costs there?
I think we're pretty far on the maturity and knowledge of cost overall. I think there might have been, in certain markets, like an unhealthy, push on, what returns justify what you have to, be prepared for. But I actually do think that there's a pretty good grasp around what the cost of these things are. But of course, I'll say, in certain markets, also from our chair, the returns have at least moved to a level where it's difficult for somebody like us to be involved in the long-term ownership of these things.
Yeah. Okay. And is a corollary, you think, that sometimes to win the auction, you do, slightly less investment that you might otherwise have, or you'll seek ways to reduce the cost of these things when that's not necessarily in society's best interests?
No, I guess there's a limit of that, but I guess that is also an industry developing, and then because it's developing so fast, sometimes there will be people who have done it too much or not right. But I think that's a healthy dynamic for society in having competition where the gold plating is chopped slowly off one by one, and you end up figuring out what is the right price versus quality, and then sometimes you have removed a little bit too much quality and you need to add some price back, but. That I think that is a learning feedback loop that has happened in all industries, which will continue to happen here. But I still think in the bigger scheme of things, of the point, reported by Ørsted and so forth, I still think in the bigger scheme of things, it is small compared to the returns being made by them along the way and the returns made in the industry overall. But of course, if you have banked to the floor on every cost going forward and priced that in, then at some point in time, there will be some projects that are going to struggle a little bit more on their profitability until the market adjusts back again.
Yeah. I suppose the Dutch auctions are a good example where and I think I detect a lot of frustration in the industry, which is they've capped bids at zero. You can't go any lower, and then it just becomes a beauty contest of government deciding who wins. And I think there's a lot of people who say, well, this is not enough. This is not a healthy market. I
think we agree with that.
Yeah, interesting. And a counter example is Portuguese solar, which said, right, you're going to have to pay us if you want to connect to the grid and take merchant risk. And it was actually pretty successful in terms of raising revenue and seeing how low costs could go for solar in Portugal, at least. Another phenomenon of global renewables investing is, it seems to me at least, less than there was, but there's a premium attached to being international. So if you're a one or a two country utility doing very similar things to one that's operating across Europe or indeed across the Atlantic, there's a higher multiple attributed. Do you think it's right to attribute a higher multiple and a higher valuation to that sort of geographic diversity? The most common explanation is it's about scale, and it's about the energy transition is taking place everywhere, and you just got more upside that way. Do you think it's justified?
I think it's justified. I think it's a matter of, it's scale, and I think seeing an industry moving so fast in different markets where it happens differently and the consequences are, and bringing those learnings into other markets, I think is hugely valuable for making better risk-adjusted returns. And then I think there's also arguably, diversification benefits achieved by being a truly global investor that you will not achieve, within Europe or within America only, where, things are much more correlated.
Yeah, interesting. And so is a corollary that you see consolidation globally in the power generation space?
Yeah, I think it's likely. I mean, it's not something I've spent too much time on. We're more on the project side and less on the acquisition of companies. It's not really our bread and butter. We're more on the project side. But I think it will happen to some extent because more wants to get global. But at the same time, it's challenging to run a global organization. So it's I think there's for and against. It depends a little bit from market to market, from company to company.
Could you say a little bit about that, the diseconomies of scale with international expansion? I mean, to me, it looks like CIP's done a pretty spectacular job in this. You're in New York doing business, having started your career in Europe. I look again at my home state. There's a sort of Star of the South is the project. There's a visitor center. People turn up and there's sort of engagement with the community and these sorts of things. It doesn't necessarily feel like CIP is an outsider here. But do you detect diseconomies of scale from not having been on the ground for a long period of time, not being able to go to politicians and say, we can help with your kind of social objectives as well, and we're invested in the community?
No, I don't think we feel that directly. You obviously have to be a little bit careful when you enter, right? I mean, that in markets, stuff will first float around in the market you're in, right? And then it starts to float out of the market. So you have to be careful in when you enter, right? And then I think the key to success is to, have people that know each other really, really well, that are placed around the world, right? For you to actually be able to do it without having, massive, dyssynergies and trying to, attack multiple markets and regions at the same time.
Yeah. Interesting. Okay, excellent. Well, that's a good note to move to what is always my final segment of the show, where we talk about a number of concepts, and I ask you whether you think they're overrated or underrated. Feel free to have a short answer. Feel free to have a long answer as well. So the first concept is the role of the power sector in driving decarbonisation. Is it going to be electrons that power the world, or is it going to be a broader set of energy vectors? So do you think the role of the power sector in decarbonisation is overrated or underrated?
I think it's a little bit, we talked about it before. I think it's underrated, right? Because I think power will then be used to create other fuels that will then help to power the world and then merge the different markets.
Yeah. I do think it's getting harder to say it's underrated. I think the IEA came out with something talking about 70% of primary energy being power, and so if that was published a few years ago, the number wouldn't have been that high.
Sure.
So I think it's harder and harder to be underrated. Would be my one nuance on that when it comes to the power sector.
Yeah, but of course it depends on what benchmark you're measuring towards. Maybe I'm measuring towards the wrong benchmark. That could be the case.
Okay. Yeah, exactly. Okay, corporate PPAs as a route to market and risk-sharing device for renewables investors globally. Do you think the role of corporate PPAs, that is someone like you who's developing an asset, selling typically on a long-term basis, need not be direct to a corporate, an Apple or a Deutsche Bahn or someone like that. Do you think the role of corporate PPAs is overrated or underrated?
I probably think it's overrated.
Mm-hmm. Okay, interesting. Excellent. So we've talked about this one. I think you've said your answer on this one, but I'll go through it anyway. The future of regulated, vertically integrated utilities in the US. Can I assume your answer is overrated?
I think so, but I have no clue how it's going to play out.
Yeah. And finally, philosophically, humanity's ability to keep global warming under 2 degrees, which is about, by what the scientists tell me, net zero by about 2070.
I think we'll figure it out.
Okay, good. An optimistic note to finish on. So I'll conclude it there. As always, great to hear your well-informed perspectives, Henrik. So Henrik Tordrup, thanks so much for taking the time to speak.
Thanks, John. It was a pleasure being on the podcast with you.
That was John Feddersen, co-founder and chief executive at Aurora, speaking to Henrik Tordrup, partner at Copenhagen Infrastructure Partners. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to subscribe on whatever platform you use. Thanks for listening and goodbye.